Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at Facebook, we're going to look at volatility, and then we're going to take a look here at the high yield corporate bond ETF HYG. But first up, let's look at Facebook. So Facebook did close up 2.9% during the regular trading session. It's been riding this 30 oversold line on RSI. It needs to get back above 50. Once it gets back above 50, that's when it'll be a signal the chart's heating back up again. You've got Fasto back above 20, above those oversold levels. There was a bullish development here in ADX. You can see the red line minus DI cross below ADX, the black line to the downside. That's a signal the bulls are trying to heat up here. There was a nice a little spike, little volume spike, the largest volume day since back here in September. And today there was a close right above EMA 4 at 168.18. That's the pink line there. The candles have been riding that pink line lower. It needs to stay above that level. Now in after hours trading, it's currently at 152. It's been all over the place. Just a little while ago it was at 143. Now it's at 152. And so what that would do, if it had a gap up open up there, that would put this middle Bollinger Band on deck. That's currently at 153.64. That's going to be the big level. Notice back here in September, it got to that level, closed above it, but it failed to hold, and the downtrend continued. It tested that level on the 17th, but failed to break. Back here in August, it failed to close above the middle Bollinger Band. The middle Bollinger Band is the dotted purple line. It's been resistance since there was a break below back here in July on this close below, and it hasn't turned into support since then. So that's going to be the crucial level to concentrate on. If it can stay above 153.64, then it could rally higher. It could possibly run up here to the 50-day simple moving average at 161.89. If the middle Bollinger Band remains resistance, the bounce will just be a short cover rally, and that will be the sell zone. Okay, let's look here at there was a bullish Harami reversal pattern that did form right here, and so this pattern formed on the 25th with this white candle, and so that pattern will be confirmed if there is a gap up open tomorrow, and the candle is above the close here and the past the midpoint of that previous black candle. So it should be if there is a gap up open and it stays positive, then that would be a bullish reversal confirmation. What you want to see here now on the daily chart is at 152. It's hitting this March April resistance zone. It's a support zone from back in March and April, and so that would act as resistance now. That could be why the share price is hitting that. That's going to be a crucial level to get above. Once a key level was major support, it can turn into resistance. It was support here in October when it had the bounce. It bounced right off of this support level, but that level broke back here last week, and so now it's going to need to get back above that level, that 152.50 level, and then back above that middle Bollinger Band at 153.64. Like I said before, if those levels are resistance, that would signal downside risk. And then as you can see here, it'll have some work to do to get up there, but yeah, that 50-day simple moving average would be the target above if it can turn that 153, 154 level into support. To the downside, if it were to close below EMA 4, let's say things reverse again, and now it's heading lower and it's at 150.43 again, that would put it below EMA 4 at 146.18. It needs to hold that level. If it closes below EMA 4, that's going to signal more downside risk. Okay, so take a look at Facebook here on the weekly chart. If it does continue heading lower, this is a chart that was these are old annotations, and as you can see, it had bounced off of the 50-week moving average back here in 2016, 2017. It broke below that level earlier in 2018, but it bounced off of the 100-week moving average. That 50-week moving average broke back here in July, and then the 100-week moving average just ended up breaking here in the start of October. And so that was signaling more downside risk. And so if the downtrend continues and EMA 4, this pink line here at 149.85, remains resistance, then the 200-week moving average at at 133.25 will be the target. It did hit 136 today, so it didn't quite hit our 200 SMA target, but it almost did. I think if it came down there and hit 133, you would definitely see buyers off of that level, but you never know. 136 might end up being low. We'll just have to see if it can get above 149.85. Basically, if you see it trading below 150, that's going to signal downside risk. Closing every week below EMA4 on the weekly chart signals the bears are in control and to continue staying short, to get, that more downside risk. Just like when the candles were above EMA4, you didn't want to be short because it was signaling the share price is heading higher, and then that's the opposite right now. Okay, let's look at VIX here. So the volatility index has been cooling down. Okay, so it's down to 62 on RSI. You have Fasto almost breaking below 50. You have Plus DI now down at 29, when it was way up here above 45. So we have a cool down going on. Today there was a close below EMA4. That's the pink line. It was the first close below this level since back here on the 17th. Okay, and so that all these candles right here were above the pink line, EMA4. The close below that is a bearish change in trend for volatility, and it does signal that it could consolidate. Tomorrow, keep an eye on 2286. That's EMA8. If that were to break, it could drop down to EMA13. That's the level that's been holding, during this recent uptrend, that started back here at the beginning of October. And so if it pulls back to 2171, you'd look for a technical bounce off of that level. If that were to break, that's when you would see that middle Bollinger Band tested at $20. It has to hold that $20 level. It has to stay above the middle Bollinger Band to keep the uptrend going. To break out higher now, it has to break above this 25 resistance level. You have the high close here on the 24th, just above 25, and so it's been all about trying to stay above 25 for VIX. Failing to stay above that level, that signals that it could consolidate. A lot of people are thinking that it needs to hit into those 30s for the market to actually bottom. Now, if we look at VIX on the 15-minute chart, you can see here it has this double top kind of thing here, and then it's pulling back. Right now, it's hitting the ascending support line in this channel, and so if it were to drop below this level, which it did close below the green line, it would put the 200 simple moving average at 2274 on deck. That would be the next level to bounce off. If that were to break, you're likely to see it drop down to 2150 to test the 300 and 400 SMAs. It is currently in a downtrend right now on the 15-minute chart and trading below the middle Bollinger Band, the 50 and 100 simple moving averages up here in the 24 zone. That does signal the bears are currently in control. Okay, and that signals upside potential for the stock market. Okay, since there's a correlation between VIX going up and the stock market going down and vice versa. Okay, let's look at VXX. This is the VIX short-term futures ETN. And so, this closed down 3% today. It's cooling down as well. See how it dropped below 70 on RSI? Once it gets above 70, it needs to stay above that level. Same thing with Fasto. It dropped below 80. Those are all signals that it's cooling down. Look at Plus DI. When volatility is really running, you could see volatility gets cranking up above 40 on Plus DI. Now it's down here at 29. It's below 30. It's cooling down. Okay, so what you want to see if you want to see the market bounce is you want to see this minus DI coming up. Okay, if you're long volatility, you want to see that Plus DI get back above 30 there. Now, currently, the share price is hitting the 400-week moving average. That's currently at 40.30. It's all about breaking in this 40 resistance zone and turning it into support. You can see here on the 29th yesterday, it closed right at that level. It closed above $40, but it's failing to get above that level. Once they let it break above, that's when it could run up here into the mid 40s. You have the high close from back here in April is the big level to break. So if it fails to break this 400-day simple moving average, it could pull back. Today there was a close just below EMA4 at 38.96, and that is a clue that it could consolidate. It was basically right at that level, but closing below that it is a signal that they're letting it slip. Now EMA8 at 37.76 will be the next key level to hold. As you can see, there wasn't a close below EMA4 since back here, same with on the 17th. So it's been pushing higher. The downside risk here for VXX is that it pulls back and it tests the 200 and 300-day simple moving averages. That's the red and blue lines there, down in that 35.75 support zone. Okay, if you look at VXX on the 15-minute chart, you can see it's really been breaking down. It formed this top up here, and then it came down to the bottom of the channel. You've got this the bottom of the channel here, pretty well defined, and then today it broke below it. What needed to do is it needed to, it's coming down, bouncing, hitting the top, pulling back off the top, and then it needed to bounce off of here in order to make another run back up to the top. But instead of bouncing off of support, it broke below, and that was the technical signal that yes, the stock market really is trying to bounce, and volatility is starting to get taken off the table a little bit here, starting to cool down. It's pulling back. So this is the change in trend, one of them that we've been looking for to see if maybe the market wants to get a little bounce, going. Right here, we've got, and the market did bounce today. It had a nice strong close. The break below the 100 simple moving average at 39.41, that is signaling downside risk. It needs to get back above that level, and the 50 simple moving average in the middle Bollinger Band here in this 39.77 to $40 basically resistance zone. Now they've turned into resistance. So now it's all about getting above 39.50 and $40 in order for for VIX, VXX to get bullish again. If those levels remain resistance, the downside risk is it comes down here and it tests low close support on the 29th, which is at 38.25. And if it does that, it might just come down and test that 200 simple moving average at 37.76. That would be the next major moving average support level below on the 15-minute chart. Okay, let's look at HYG here. This is the high yield corporate bond ETF. And so as the market was bouncing today, this was bouncing as well. And so, yeah, as you can see here, it's been in a downtrend. It's down here bouncing off of 30 on RSI, Fasto's back above 20. It has that same crossover on ADX. You can see the red line crossed over the black line to the downside. And so, yeah, that's a signal that it could try to get a little bounce going here. It closed right at EMA4. It closed at 84.35, and EMA4 is at 84.36. So it's going to need to break that level. Notice how the candles have been riding it lower. Today, it bounced off of the 300 and 200-day simple moving averages. It's all about holding those levels, that 84 support zone. If you can get above 84.35, then you have the 84.52 level to break, EMA8. That'll be the next key level. If it could get above EMA8, that's when it could get moving. You can see back here, it did get above EMA 13. It's just, yeah, we'll keep an eye on this HYG. You can see there's been really big volume down here. The volume is really increased, and this is the key level to bounce off of support. This is the huge support level. This is where it should find support and start to get a reversal going. Keep an eye on the MACD 8, 13, and 5 for a bullish crossover. If you look here at the HYG 15-minute chart, you can see here, this is what caught our eye today, was the break first above that 50 simple moving average. You can see how that had been resistance. Okay, and so that was the signal that the chart was heating up and that it was in play, and then it actually closed above the 100 simple moving average on the 15-minute chart. There hadn't been a close above that level in days. If it can stay above this 84.30 level, that should be our clue that it wants to push higher, and look for a possible run back up here to this 84.56 level. Notice the increasing volume into the close with the nice volume spike there. So it had, it was, people were loading up and pushing it above resistance, and so that's a signal that it could keep pushing higher. If it drops below the 100 simple moving average, that'd be a red flag signal, and it's cooling down, and it has to stay above that 50 simple moving average as well. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.